Question 1. Which of the following best describes the key difference between an owner's title policy and a lender's title policy? A. An owner's title policy protects the lender's investment, while a lender's title policy protects the owner's investment. B. An owner's title policy covers only the amount of the property purchase, while a lender's title policy covers the entire loan amount. C. An owner's title policy protects the property owner from title defects that existed before the policy was issued, while a lender's title policy protects the lender against title defects that may affect their interest in the property. D. An owner's title policy covers legal costs associated with resolving title issues, while a lender's title policy only covers financial losses. Answer. C. Explanation. An owner's title policy provides protection to the property owner from title defects that existed prior to the issuance of the policy, such as unknown liens or disputes over ownership. This policy ensures the owner is covered for the full amount of their investment in the property. On the other hand, a lender's title policy protects the lender's financial interest in the property. It covers issues that could affect the lender's position, such as title defects or claims that could affect the enforceability of the mortgage. The coverage amount for a lender's title policy is typically limited to the loan amount, not the property's value. This distinction is crucial for understanding the scope of protection each type of policy offers. What is the primary purpose of conducting a title search before issuing a title insurance policy? A. To determine the current market value of the property. B. To uncover any title defects, encumbrances, or claims that might affect the property's ownership. C. To verify the physical condition of the property and ensure it meets zoning regulations. D. To assess the financial stability of the property owner. Answer. B. Explanation. The primary purpose of conducting a title search is to identify any potential title defects, encumbrances, or claims that might affect the property's ownership. This includes checking for liens, judgments, or unresolved disputes that could challenge the validity of the title. By uncovering these issues, the title insurance company can address them before issuing a policy, ensuring that the property is free from potential legal issues that could affect the ownership rights of the buyer or lender. This process is crucial for mitigating risks associated with title defects and providing accurate title insurance coverage. Question 3 scenario. Mr. Anderson is purchasing a residential property in Virginia. During the title search, the title examiner discovers a lien from a previous owner that was not resolved. What should Mr. Anderson do to protect his interests before closing on the property? A. Proceed with the purchase as planned, assuming the lien will not affect the current transaction. B. Request that the lien be resolved and cleared before closing, as it could affect his ownership rights. C. Negotiate a low purchase price with the seller to compensate for the unresolved lien. D. Obtain a lender's title policy to cover the potential risk of the lien, assuming the issue is minor. Answer. B. Explanation. Mr. Anderson should request that the lien be resolved and cleared before closing on the property. An unresolved lien from a previous owner could impact his ownership rights and create legal complications. It is essential to ensure that all title issues are addressed prior to completing the purchase to protect against potential legal claims or financial liabilities. The title company typically works to clear such issues before issuing an owner's title policy, but it is critical for Mr. Anderson to verify that the lien is resolved to avoid future disputes or financial burdens. Options A, C, and D do not adequately address the risk associated with the unresolved lien and could lead to problems with property ownership. Question 4. Which of the following scenarios would most likely require an endorsement to a standard title insurance policy? A. The property is located in a flood zone which does not affect the title but requires a separate insurance policy. B. The property is a single-family dwelling that is not subject to zoning restrictions. C. The property has an easement for a utility company that was not originally disclosed. D. The property is sold at auction and the purchase price is below market value. Answer. C. Explanation. An endorsement to a standard title insurance policy is often required when there are specific conditions or exceptions that are not covered by the standard policy. In this case, an easement for a utility company that was not originally disclosed would need to be addressed through an endorsement. This is because easements can affect property use and value, and the title insurance policy may need to be modified to cover any potential issues related to the easement. Options A, B, and D do not typically necessitate policy endorsements as they do not directly impact the title's coverage or validity. Question 5. Which of the following best describes the gap coverage provided by a title insurance policy? A. Coverage for the period between the title search and the closing date, protecting against issues that arise during this time. B. Coverage for any errors made by the title examiner during the title search process. C. Coverage for claims made by third parties who were not identified in the title search. D. Coverage for physical damages to the property that occur after the policy is issued. Answer A. Explanation. Gap coverage (ICA) title insurance policy refers to the protection provided for the period between the completion of the title search and the actual closing date. This coverage is essential because issues such as new liens, claims, or other encumbrances could arise during this period. Gap coverage ensures that any such issues discovered after the title search but before closing are covered by the policy. Options B, C, and D do not accurately describe the purpose of gap coverage. Question 6. If a title insurance policy excludes coverage for claims based on zoning issues, what should a title insurance agent advise their client to do? A. Proceed with the transaction and assume zoning issues are not a concern. B. Obtain a separate zoning insurance policy to cover potential zoning disputes. C. Negotiate with the seller to reduce the purchase price due to zoning concerns. D. Rely on a property inspection to identify any potential zoning issues. Answer B. Explanation. If a title insurance policy excludes coverage for zoning issues, it is prudent for the client to obtain a separate zoning insurance policy to cover potential disputes or issues related to zoning regulations. Title insurance typically does not cover zoning matters, so a specialized policy would provide protection against such claims. Option A does not address the coverage gap, C does not guarantee protection from zoning issues, and D does not provide insurance against zoning-related claims. Question 7 scenario. MS Johnson is refinancing her mortgage and discovers a previously unknown judgment lien against her property. How should she handle this situation to ensure a smooth refinancing process? They ignore the judgment lien and proceed with the refinancing, assuming it will not impact the mortgage. B. Address and resolve the judgment lien with the appropriate legal authorities before proceeding with the refinancing. C. Request that the lender ignore the judgment lien as it was unknown until now. D. Cancel the refinancing process and look for another property without judgment liens. Answer B. Explanation. MS Johnson should address and resolve the judgment lien with the appropriate legal authorities before proceeding with the refinancing. Judgment liens can significantly affect the title and potentially hinder the refinancing process. Resolving the lien ensures that it does not create legal or financial complications for the refinancing transaction. Ignoring the lien option A or requesting the lender to overlook it option C would not resolve the underlying issue. Cancelling the refinancing option D might not be necessary if the lien can be addressed. Question 8. When a title insurance policy is issued with extended coverage, what additional protections does it typically include compared to a standard policy? A. Coverage for defects discovered after the policy issuance. B. Protection against unrecorded easements and rights-of-way. C. Coverage for all environmental hazards affecting the property. D. Protection against future changes in property ownership laws. Answer B. Explanation. Extended coverage in a title insurance policy typically includes protection against unrecorded easements and rights-of-way, which are not covered under a standard policy. This extended coverage ensures that potential issues affecting the property's use, which may not be recorded in public records, are addressed. Options A, C, and D do not accurately describe the additional protections offered by extended coverage. Question 9. Which federal regulation requires title insurance companies to provide a closing disclosure to borrowers? A. Real Estate Settlement Procedures Act, RISPA. B. Truth in Lending Act, TILA. C. Dodd-Frank Wall Street Reform and Consumer Protection Act. D. Fair Credit Reporting Act of CRI. Answer A. Explanation. The Real Estate Settlement Procedures Act, RISPA, requires title insurance companies to provide a closing disclosure to borrowers. This document outlines the costs and terms associated with the real estate transaction, ensuring transparency for the borrower, while TILA and the Dodd-Frank Act address related aspects of lending and consumer protection, i.e. SPA specifically mandates the provision of the closing disclosure. The FCRA deals with credit reporting, not real estate transactions. Question 10. What is the main purpose of a title commitment in a real estate transaction? A. To provide a final settlement of all financial obligations related to the property. B. To guarantee that the title insurance policy will cover all potential title defects. C. To outline the conditions under which the title insurance policy will be issued. D. To assess the physical condition and market value of the property. Answer: C. Explanation. The main purpose of a title commitment is to outline the conditions under which the title insurance policy will be issued. It details any requirements that must be met before the policy can be finalized, such as clearing any title defects or addressing specific exceptions. This document provides a preliminary assessment of the title and sets the stage for issuing the final title insurance policy. Options A, B, and D do not accurately reflect the purpose of a title commitment. Question 11. In the context of title insurance, what does recording refer to? A. The process of maintaining physical records of property inspections. B. The filing of legal documents with a government office to establish property ownership. C. The process of documenting financial transactions related to the property purchase. D. The recording of property values for tax assessment purposes. Answer: B. Explanation. Recording in title insurance refers to the filing of legal documents with a government office, such as the County Recorder's Office, to establish and protect property ownership. This process ensures that the property's title and any associated interests or claims are publicly documented and recognized. Options A, C, and D do not accurately describe the recording process related to title insurance. Question 12. Which of the following best describes the insuring provisions of a title insurance policy? A. Provisions that outline the specific property maintenance requirements for the insured. B. Provisions that detail the circumstances under which the title insurer will pay claims related to title defects. C. Provisions that specify the premium amount and payment terms for the policy. D. Provisions that describe the process for transferring the title insurance policy to a new owner. Answer: B. Explanation. The insuring provisions of a title insurance policy detail the circumstances under which the title insurer will pay claims related to title defects. These provisions outline the coverage provided by the policy and specify the types of claims that are covered, such as undisclosed liens or ownership disputes. Options A, C, and D do not accurately describe the insuring provisions as they pertain to other aspects of property management or policy administration. Question 13. When a title insurance company issues a policy with an exception for matters not of record, what does this exception typically cover? A. Issues that are documented but not currently visible in public records. B. Issues related to the physical condition of the property, such as structural defects. C. Matters affecting the title that are not recorded in public land records but may still impact ownership, such as unrecorded easements or claims. D. Disputes between neighbors over property boundaries that are not legally recognized. Answer: C. Explanation. An exception for matters not of record. A title insurance policy typically covers issues that are not recorded in public land records but may still impact property ownership, such as unrecorded easements, rights of way, or other claims. These matters can affect the property's use or value and are not visible in standard public record searches. Options A, B, and D do not accurately describe the scope of this exception. Question 14. Which of the following is NOT a typical component of a title commitment? A. The legal description of the property. B. The amount of coverage provided by the title insurance policy. C. The current market value of the property. D. The requirements that must be met before the title insurance policy is issued. Answer: C. Explanation. The current market value of the property is not a typical component of a title commitment. A title commitment generally includes the legal description of the property, the amount of coverage provided by the title insurance policy, and the requirements that must be met before the policy is issued. The market value of the property is usually assessed separately, often through an appraisal. Options A, B, and D are all components typically included in a title commitment. Question 15 scenario. Mr. Lee discovers that the property he is purchasing has a recorded right-of-way for a neighboring property. The right-of-way was disclosed in the title search, but it significantly impacts the use of the property. What should Mr. Lee do to address this issue? A. Proceed with the purchase and accept the right-of-way as a permanent condition of the property. B. Negotiate with the seller to reduce the purchase price due to the impact of the right-of-way. C. Request an endorsement to the title insurance policy to provide additional coverage for the right-of-way. D. Ask the lender to remove the right-of-way condition from the title commitment. Answer: C. Explanation. Mr. Lee should request an endorsement to the title insurance policy to provide additional coverage for the right-of-way. An endorsement can modify the policy to address specific issues like a right-of-way that impacts property use, providing protection against potential disputes or problems related to the right-of-way. Options A and B do not fully address the issue with additional insurance protection, and option D is not a feasible solution as lenders cannot remove recorded conditions from the title. Question 16. What does a Torrens title system ensure in the context of real estate transactions? A. It guarantees the title to the property is free from any defects or encumbrances. B. It provides a method for recording property transactions and establishing ownership with a government authority. C. It ensures that all title insurance policies will be automatically updated with new property information. D. It requires property owners to annually renew their title insurance coverage. Answer B. Explanation. The Torrens title system provides a method for recording property transactions and establishing ownership with a government authority. This system simplifies property transfers by providing a state-backed guarantee of title that is more secure than the traditional abstract of title method. Options A, C, and D do not accurately describe the Torrens title system. Question 17. Which of the following best explains the term easement in real estate transactions? A. A legal right granted to a party to use a portion of another party's property for a specific purpose. B. An agreement between parties to share the cost of maintaining a property. C. A form of insurance that protects against title defects. D. A clause in a mortgage agreement that allows the lender to take possession of the property. Answer A. Explanation. An easement is a legal right granted to a party to use a portion of another party's property for a specific purpose, such as for utilities or access. Easements are important in real estate transactions as they can affect property use and value. Options B, C, and D do not accurately describe what an easement is. Question 18. In title insurance, what is the primary purpose of an abstract of title? A. To provide a summary of the physical condition of the property. B. To compile a chronological history of the title, including all recorded documents and transactions. C. To offer a detailed market analysis of the property's value. D. To list the financial obligations of the current property owner. Answer B. Explanation. The primary purpose of an abstract of title is to compile a chronological history of the title, including all recorded documents and transactions related to the property. This document helps in identifying any potential issues or defects in the title. Options A, C, and D do not accurately describe the function of an abstract of title. Question 19. Under Virginia law, what is required for a title insurance agent to legally conduct business? A. Registration with the state real estate commission. B. Certification from the National Association of Insurance Commissioners. C. A valid title insurance agent license issued by the Virginia Bureau of Insurance. D. Membership in a national title insurance organization. Answer C. Explanation. Under Virginia law, a title insurance agent must hold a valid title insurance agent license issued by the Virginia Bureau of Insurance to legally conduct business. This licensing ensures that the agent meets state-specific requirements and adheres to regulatory standards. Options A, B, and D do not accurately reflect the specific licensing requirements for title insurance agents in Virginia. Question 20. What is the main difference between standard coverage and extended coverage in title insurance policies? A. Standard coverage only includes protection for known issues, while extended coverage includes protection for both known and unknown issues. B. Standard coverage provides protection for up to 80% of the property value, while extended coverage provides full value protection. C. Standard coverage includes protection for unrecorded easements, while extended coverage does not. D. Standard coverage is typically less expensive than extended coverage due to its limited scope of protection. Answer A. Explanation. The main difference between the standard coverage and extended coverage in title insurance policies is that standard coverage typically includes protection for known issues, while extended coverage provides protection for both known and unknown issues, such as unrecorded easements and rights-of-way. Extended coverage offers a broader range of protection compared to standard coverage. Options B, C, and D do not accurately describe the scope of coverage provided by standard and extended policies. Question 21. Which of the following is typically covered by a title insurance policy's post-policy coverage? A. Defects or issues arising after the policy has been issued. B. Errors made in the recording of the property's title prior to the issuance of the policy. C. Claims made by third parties based on events occurring before the policy date. D. Claims related to defects that were known but not disclosed during the title search. Answer A. Explanation. Post-policy coverage in a title insurance policy typically covers defects or issues arising after the policy has been issued. This type of coverage ensures that the policyholder is protected against new or unforeseen title issues that occur after the policy effective date. Options B, C, and D refer to issues that would be covered under different aspects of the title insurance policy. Question 22. What is a lien in the context of title insurance and how does it affect property ownership? A legal claim or right against a property to secure the payment of a debt or obligation which can impact the transfer of ownership. B. A type of insurance that protects against damage to the property caused by third parties. C. An agreement between property owners to jointly maintain shared property. D. A document that certifies the property's value for tax purposes. Answer A. Explanation. A lien is a legal claim or right against a property to secure the payment of a debt or obligation. Liens can affect property ownership because they can create encumbrances that need to be resolved before the property can be transferred or sold. Liens must be addressed to ensure clear title as they can prevent the transfer of full ownership until the underlying debt is satisfied. Options B, C, and D do not accurately describe a lien. Question 23. In title insurance, what is the purpose of a Schedule B ECIT title commitment? A. To list the standard exceptions to coverage that apply to the title policy. B. To detail the underwriting requirements that must be fulfilled before issuing the policy. C. To provide a summary of the property's appraisal, value, and market analysis. D. To outline the policy's coverage limits and premium amounts. Answer A. Explanation. Schedule B ECIT title commitment lists the standard exceptions to coverage that apply to the title policy. These exceptions include matters such as easements, restrictions, and other rights that may not be covered by the insurance policy. This schedule helps to identify potential issues that could affect the title but are excluded from the policy's protection. Options B, C, and D do not accurately describe the purpose of Schedule B. Question 24. Which of the following statements accurately describes the role of a title insurance underwriter? A. To issue policies based on the insured party's credit score and financial history. B. To review and evaluate the title search results and determine the insurability of the title. C. To manage and invest the premiums collected from policyholders. D. To negotiate settlement amounts for claims made under the title insurance policy. Answer B. Explanation. A title insurance underwriter reviews and evaluates the title search results to determine the insurability of the title. The underwriter assesses risks and decides whether to issue the policy and under what terms. This role is critical in ensuring that title policies are issued based on a thorough understanding of potential risks and defects. Options A, C, and D do not accurately describe the role of a title insurance underwriter. Question 25. Scenario. MS. Johnson is buying a property and during the title search, an unrecorded claim is discovered that could potentially affect her ownership. What should MS. Johnson do to address this issue? A. Accept the claim as a part of the property's title without further action. B. Seek an indemnity agreement from the seller to cover any potential claims related to the issue. C. Request an endorsement to the title insurance policy to include coverage for the unrecorded claim. D. Ignore the issue if it is not recorded in public records. Answer C. Explanation. MS. Johnson should request an endorsement to the title insurance policy to include coverage for the unrecorded claim. An endorsement can provide additional protection against issues that are not recorded but could still affect the title. This ensures that MS. Johnson is protected from potential disputes related to the unrecorded claim. Options A, B, and D do not adequately address the need for additional insurance coverage for potential risks. Question 26. What is a subordination agreement in the context of title insurance? A. An agreement that allows a second mortgage to take priority over an existing first mortgage. B. A document that certifies the property's value and suitability for title insurance coverage. C. A clause in the title policy that limits the insurer's liability for certain types of claims. D. An agreement that transfers title insurance coverage from one property to another. Answer A. Explanation. A subordination agreement is an agreement that allows a second mortgage or lien to take priority over an existing first mortgage. This agreement is important in refinancing and purchasing situations as it determines the order of claims on the property. The agreement ensures that the new or subordinate lien has priority in case of foreclosure. Options B, C, and D do not accurately describe a subordination agreement. Question 27. Which of the following is an example of a title defect that a title insurance policy might cover? A. A zoning change that affects the property's use. B. A deed recorded with a clerical error that impacts ownership. C. A new construction project planned on adjacent land. D. An increase in property taxes due to a recent appraisal. Answer B. Explanation. A title defect covered by a title insurance policy includes issues such as a deed recorded with a clerical error that impacts ownership. Title defects can affect the legality and validity of property ownership and are addressed by title insurance to protect against such problems. Options A, C, and D do not typically qualify as title defects covered by the insurance policy. Question 20. What is the primary function of a title search in the process of issuing title insurance? A. To assess the property's market value and potential for appreciation. B. To identify any existing claims, encumbrances, or defects affecting the property's title. C. To evaluate the physical condition and maintenance needs of the property. D. To determine the insurance premium based on the property's location and characteristics. Answer B. Explanation. The primary function of a title search is to identify any existing claims, encumbrances, or defects affecting the property's title. The search reviews public records to uncover any issues that could impact the property's ownership or value, ensuring that the title is clear before issuing insurance. Options A, C, and D do not accurately describe the function of a title search. Question 29. What is typically included in the Schedule A section of a title commitment? A. The list of exceptions and exclusions from coverage provided by the title insurance policy. B. The basic information about the property and the parties involved in the transaction. C. The underwriting guidelines and requirements that must be met for policy issuance. D. The policy's coverage limits and premium calculation details. Answer B. Explanation. Schedule A title commitment includes the basic information about the property and the parties involved in the transaction, such as the property's legal description, the names of the buyers and sellers, and the amount of coverage. This section provides a summary of the transaction details before the title insurance policy is issued. Options A, C, and D describe other sections or aspects of the title commitment. Question 30. Which of the following describes a cloud on title and its significance in title insurance? A. A financial burden on the property owner, such as outstanding loans or debts. B. A pending legal action that challenges the validity of the property's title. C. A visual obstruction on the property that affects its marketability. D. A type of insurance claim related to physical damage to the property. Answer B. Explanation. A cloud on title refers to a pending legal action or issue that challenges the validity of the property's title. It can affect the property's marketability and may need to be resolved before the title can be transferred or insured. Title insurance addresses such issues to ensure that the title is clear and marketable. Options A, C, and D do not accurately describe a cloud on title.